Now for a closer look at what's playing itself out in that market scene is Muhammed Wagley from Sasfin Wealth. Muhammad, happy Monday. Hello.
Hi, Nolitande. Thank you so much for having me. Always a pleasure to be here.
Brilliant. Quite a day we're already having, actually. I want us to maybe cast our eyes ahead first, taking stock of what might drive market forces this week. It's been more than volatile, I'd say. But let's talk about the week ahead.
Yeah, so some key information coming out. I think everybody's always got their eye out on, interest rate cut news and things like that. And to that extent, we do have the Jackson Hole Symposium. I think that's on Wednesday. I think the view is, and my hope is the same, that there really shouldn't be any surprises on that front. So, following the sort of shock that we had a couple of weeks ago, where I think markets were really panicking that the US might be facing a recession, it does seem like things have settled down on that front. And that the market has a little bit of certainty that we're going to be getting that 25 basis point rate cut in September. So I'd be very surprised if that narrative changes at all. And that's really what the global markets, I would say, are going to be keeping an eye out for. But, given that the panic that markets tend to be prone to, I think Mr. Powell is going to be very cognizant of that. And my hope, and I do think this is the case, is that will be reflected in his tone. But, that being said, one has to bear in mind that if he comes out and, does convey sort of a message that, might panic markets, we'll see a bit more volatility. But as it stands, we don't expect that to happen. So, yeah, let's hope things stay as they are.
You mentioned the issue of recession. So, as of Monday, the 19th of August, I think it's important to say that. Where are we with the recession fears here? A soft landing, a hard landing? We've seen some PMI data coming out. I think we are expecting some more PMI data. A lot of it is actually showing some form of slowdown around the world, Mohammed. But where are market participants with this issue?
Yeah, no, it is interesting to see. I think generally speaking, outside the market does tend to panic. But if you look at sort of the tone that Mr. Powell has had, stating that everything is going to remain data dependent, data driven, I think within that context, it hasn't been, even the poor data that we've gotten hasn't been necessarily sort of too poor. I think, one also has to remember that we are in a market, or at least sort of a global market, where tech and things like that have, done exponentially well. And, the outlook is that is going to continue to be the case. And we combine that with the fact that, people are probably looking to take a bit of profit here and there. This also does seem like a bit of an excuse. From my perspective, the fears of a recession, I wouldn't say are unfounded, but they are a bit premature. I think we need a lot more data, reinforcing that before we can say that, perhaps this is the case. Because ultimately, I don't think the American market has been as soft as people are sort of making it out to be. So hopefully, we don't get any news that sort of proves me wrong and we sort of continue as is.
Let's get into some company news here at home now, a very busy one. Let's start off with the Absa. Certainly, I think the elephant in the room today, calls for a brand new CEO, but also out with numbers. I would call them relatively flat, just maybe thinking of just what Standard Bank was reporting last week as well, Mohammed. How do we place Absa right now? But even then, markets are rallying this share, so it's up 4%. Is that on the news of a new CEO?
So you know what, it's quite an interesting one. I'm very much in agreement with you. I didn't think this was the greatest set of numbers, and you make a great point, especially when you contrast them to Standard Bank and Nedbank, but the market has reacted quite positively to it. So just to touch on those financials a little bit, we saw a 5% loss in headline earnings per share. They also noted that while they did benefit from higher interest rates, their non-interest income was lower. Again, contrast that with Standard Bank and Nedbank, that doesn't look sort of too favorable from the Absa perspective. And then lastly, credit impairment charges were pretty much flat. They didn't worsen, which I suppose is good news, but they didn't really improve either. Again, contrasting that to the other two companies who did sort of, stand, in a good place in that respect. It doesn't really paint the best picture. But they did say, just in addition to, the CEO news, which you mentioned, they did say that they are expecting the second half of a year to be, a lot better. So in my mind, it must be that, the market is taking them at face value in terms of their outlook. And perhaps that's why we're seeing a rally. But, truth be told, I couldn't necessarily make sense of it. But, the rally is welcome. I won't be complaining.
let's talk also about what we are seeing with MTN. When I read the set of numbers also, Mohammed, it actually reads like MTN has done really, really well. And those currency issues are really just eating into the fact that I think from an operational perspective and a strategy perspective, they're executing quite okay.
No, it is quite interesting. If you look at sort of just the constant currency numbers, the group revenue there is actually quite good. We're seeing quite a bit of growth there, even a 12% growth, sort of at the top line level. But, you cannot look at these numbers in isolation. When you factor in sort of the devaluation of the Naira, that figure actually drops to around 20%, which is, a huge swing and gives you sort of an idea as to sort of how big that loss was really in their world. They are taking steps towards rectifying the issue, and this isn't something that, is, let's call it like a structural issue. They shouldn't be seeing, these losses every year. The Naira is not going to be devaluing sort of every year, but these are sort of risks that they face in the areas which they operate in. So I think the guidance was relatively positive, and they are taking steps towards cutting their costs. They are taking steps towards seeing a lot more sort of growth locally. But again, I'm a bit pessimistic is probably not the right word. I'm a bit skeptical, as to how these things are going to materialize. But on the day they're more or less flat. But I do think that somewhat optimistic outlook has actually prevented the share from falling further, because it really doesn't paint a pretty picture, when you do factor in the devaluation of the Naira there.
Very interesting indeed. I'm also keen to get your thoughts on Thungela. Also not the best set of numbers for them. I guess also where we are in the commodity cycle, still quoting issues at Transnet. And I think it's just something worth, quoting it, because I think Thungela is one of those companies that's actually been very proactive about how they manage their relationship with Transnet. They've been optimistic in public, but it just isn't coming together the way that it can for them when it comes to Transnet, Mohammed.
Yeah, absolutely. So just on the day, not really a great day to report. I probably said not the greatest set of numbers 3 times, but again, that's the case here. But what I will note that's a little bit different in this instance, a lot of this was largely expected. You mentioned the Transnet thing. Those issues don't get solved overnight. And I don't think really anybody expected them to. But just speaking to what you mentioned earlier in terms of the proaction that we've seen in Thungela's on Thungela's front, they've mentioned that look, it's not going to get changed anytime soon, but we're hoping that we may see some positive news there, going into 2025. The other thing that was putting pressure on them, and this again, sort of out of their hands, is the soft coal prices. So yeah, the financials were down pretty substantially. Just to put it into perspective, last year they paid an interim dividend of about 10 rand a share. This year that's all the way down to 2 rand per share. But there were a few things that I think maybe the market took a bit of solace in. They've announced the share repurchase program. But really reading between the lines here, seems the market had priced in sort of a lot of this malaise. There wasn't really too much of a surprise. These issues that they're facing, have been identified, and the hope is that really they can turn them around. Thungela seems optimistic that that will be the case. But, coming back to what I mentioned in relation to MTN, it does remain to be seen, if this does happen. So the share price not taking too much of a beating today. But, let's see if they can turn these things around.
All right, Mohammed, let's get into some stock picks now. Let's start off by looking at counters that industry peers have also liked.
I went for athleisure stock, Lululemon.
Okay.
And the business has taken a bit of strain. I mean, the share price has taken a bit of strain more recently, as the performance has been below expectations. So they had a post-COVID sugar high, and when the numbers deflated in North America, they came under pressure. But I think the growth in their international business, China and other markets, will probably support long-term value. And it's a very good business, very well run, good returns. So that will be my pick for today.
My stock pick for the day will be DRD Gold. We've seen gold prices trading near all-time highs. I do think that if this is the case for the medium to long term, there is potential that DRD Gold could continue to sustain its top line and even grow it, which could then filter down to the bottom line. And as we know, investors tend to look for businesses that are earning the most to, pour their money into. And I do believe that DRD Gold might be one of those businesses should the gold prices sustain at these high levels.
All right, keen to get your thoughts on some of those counters there, Mohammed.
Interesting. So, I'll start with Lululemon. This is one that we do follow here, and it's quite an interesting one. Your analyst mentioned, they've been a bit under pressure and have been since COVID. And I think really there's a link there between, the sort of stagnation that we've seen in China and, this company's performance over the period since COVID. So really then, what the catalyst that this company will be looking for is probably a bit of a rebound or growth in the Chinese space. And, they're not sort of alone in that respect. If you have a look at Nike, they're very much in a similar boat. If you have a look at sort of the big luxury players, your big players like Louis Vuitton, Mays, they're sort of all in that same boat. And the thing is, China is in a bit of a slump. They haven't really recovered from from pre-COVID levels, but that's not going to be true, going forward. At some point, they will recover, and companies like Lululemon will be big beneficiaries in that space. So to that extent, it does make sense to have a little bit of exposure there. So not too against Lululemon, I've got to say. And then the other ticker was DRD Gold, an interesting one. So look, from my perspective, always makes sense to have a bit of a hedge, always makes sense to, use gold for that sort of thing. If you've got some already, and I think the gentleman there did mention it, gold is already at all-time highs. And I think from that perspective, when something is at an all-time high, generally one should exercise a little bit of caution. But, that being said, I mentioned this earlier as well, when those rate cuts come down, we are expecting SA equity as a whole to look a little bit more attractive. And so it wouldn't just be DRD Gold, but really the broader market as a whole should be big beneficiaries in that sense. So if you do have a bit of exposure there already, perhaps it might be a bit more prudent to look elsewhere. If not, maybe it does make sense to get some, but one should just be cautious, of the fact that gold is trading at near sort of all-time highs.
And with that said, Mohammed, which counter are you having this Monday afternoon?
So I'm going to go with the Trade Desk. This is a company I've picked before, but it's one that I really like. So they're a digital advertising exchange. Basically, you're thinking, ad spaces on the open internet. Now, basically, just to sum it up sort of as succinctly as I can, they operate in the digital ad spaces that are not Facebook or Google. So basically, when you're thinking about streaming and connected TV, they're really the big player in that space. And, the trends show us that, people are spending a lot more time on their streaming platforms than ever before, whether that is Spotify, Netflix, Prime, Disney, etc. And then when you combine that with, marketers in general have a need to get a little bit more bang for their buck given the tough environment, I think the Trade Desk is really well positioned for further growth and, further market share. So that's definitely one ticket to look out for. And yeah, definitely worth having some exposure there.
Well, Mohammed, thank you for getting the week going for us. An absolute pleasure to have you this afternoon. That was your midday markets update with Sasfin Wealth's Muhammed Wagley.